We have now headed into the final phase. By final phase, I'm referring to markets in general, so Bitcoin, Ethereum, altcoins. But nonetheless, I do think in terms of where we are in terms of the macro cycle, we are now heading into this final period. And the final period is actually a massive opportunity because this is the period where you see the most growth. 80% of returns price-wise typically happen in the last 20% of cycles. So from a macro point of view, you can assert that we are late cycle, but from a micro point of view, you can assert that this is actually the period with the most opportunity. So, there are, I guess, divided opinions on the timeline at the moment. Some people are saying right now you should be very cautious because we're heading to the end of the cycle. And then you have a lot of other people getting really excited because we're heading into the end of the cycle. This doesn't mean either camp is wrong or right. They're simply just viewing things with a different time frame. And in today's video, I want to specifically discuss how this pertains to risk on assets. So Bitcoin, Ethereum, and then finally altcoins, which are probably set to be the biggest beneficiary of this blow-off phase. But then, of course, the assets which end up coming down just as hard after it's all said and done. So coming at you guys from a slightly different location today in the tropics, but I wanted to get this video out to you guys and just talk a little bit more candidly about, where I think we are in the cycle. So overall in the cycle, as I said, I believe we are in this final phase, but what I want to talk to you guys about is how the capital rotation actually happens during this phase, because I think to actually succeed in this period, it's absolutely essential to understand how capital actually rotates during this period of the market. Because things are heightened, because risk on mania really sets in during this period, because everyone is looking to take on a bunch of risk during this period. Typically the blow-offs across the market, so this can be on altcoins, this can be on Bitcoin, Ethereum, these happen much quicker, they happen much more powerfully, and they tend to lead to huge explosions. So you have to be very careful with how you maneuver and your risk parameters during this period due to these heightened emotions. Heightened emotions typically create volatility both to the upside, causing massive pumps, and also to the downside. It's not unlikely as we enter, and I would say we've already entered this phase of the market, that you'll actually see periods where you have big liquidation flushes, big drawdowns, especially as open interest begins to climb up. It's already started to climb up, but if you look at the metrics, it's nowhere near the peak levels that we saw in November 2024, and then going back to 2021, where altcoin mania really set in. But I want to, preemptively give you guys this video, and instead of making this video in November, once things are probably already going absolutely nuts, so you are well prepared. So let's start with Bitcoin. Bitcoin has had a big run up, and it's basically gone all the way from the bear market lows at I think $16,000. Pretty crazy to think back to those days that Bitcoin was $16,000. I remember being in London for Token 2049 in 2022 and rushing home to my hotel room to write a breaking news thread on the FTX collapse, and thinking back to those days. Everyone was panicking, but what a massive opportunity it was in hindsight. Now, I probably didn't ape as much Bitcoin as I should have. I more so was publicly buying Ethereum at the time for $1,000. Still done well, but obviously Bitcoin has performed a lot better. And this is, one of the points that I want to make in today's video. Bitcoin has performed really, really well. It's run up very aggressively, and you saw it even recently break out from the 110K level, going now to around the 120K level. But Ethereum, really until Bitcoin hit 110K, barely moved. It was sitting around 2,400 for months and months and months, while Bitcoin went up pretty much from 70K to 110K. It's only this latest move where Bitcoin went from 110K to 120K that we've actually seen ETH reprice from 2.4K to 3.8K. So ETH has begun a little bit of a catch-up trade on Bitcoin. I think a lot of investors are starting to feel like they've missed the Bitcoin trade. Not everyone yet. I still think Bitcoin goes higher, but a lot of investors are starting to feel, maybe we've missed the Bitcoin trade. So what's the next best thing that we can get into? And a lot of people have ascertained that is Ethereum. Hence why you've seen slowing ETF inflows for Bitcoin and increasing ETF inflows comparatively for Ethereum. So that is a very clear trade that's happening at the moment. However, I still think that the stage is set for Bitcoin to hit 140, 150, and 160K. And if you are in that camp too, and you also believe this, then that's actually good news, because we know that if Ethereum rallied so strongly when Bitcoin went from 110 to just 120, what could potentially happen if Bitcoin has its next breakout from 120 to 160. That, in my opinion, if Ethereum rallied from 2400 to 3800 in a 10K move in Bitcoin, the next 30K move in Bitcoin for Ethereum could easily be that move that takes ETH from 4K to 6K, 7K, 8K. And as Bitcoin, starts to reach its high for the cycle, this is how, the flow of funds that I mentioned earlier typically works. People tend to rotate down the risk curve because they see, Bitcoin has performed so well, they feel like they've missed the Bitcoin trade. So the natural thing to do, and we've already started to see this happen a little bit, is to start betting on Ethereum as the catch-up trade. A lot of institutions, fund managers, they're going to start pushing the Ethereum narrative because, they see the move that Bitcoin's made and they think that they can replicate the same things with ETH. And this is why we are starting to see ETH strategy companies come into the market, just like we've seen Bitcoin strategy companies accumulating Bitcoin, like Lubin's SBET, etc., are good examples of this. So this catch-up trade, I think, really, it's already prominent, but it really becomes prominent once Bitcoin puts in a high. So what will happen is liquidity will rotate from Bitcoin. People will try to play the catch-up on Ethereum. This is probably the trigger for Ethereum to go to 5 to 6K. Now, what's going to happen when Ethereum rallies? Well, this is the good news for altcoins. Typically, when Ethereum rallies, altcoins catch up really, really aggressively as people try to front run the increasing sentiment in the market. And we've seen this even over the past few weeks. ETH rallying from 2,400 to 3,800 has already caused, I think it's closer to actually $4,000 at the time of recording this video. It's already caused mania across a bunch of alts. Coins like PENGU, which were down only, they went to all-time highs, pretty quickly. A lot of the meme coins have been rallying. It's created risk-on environment for some of the on-chain coins. So we've already seen this small move in Ethereum comparatively to what would come if Bitcoin hit 150K already send altcoins rocketing, and it's really increased sentiment. So if you can imagine what's happened in the past few weeks, then imagine what happens when Ethereum's at 6, 7, 8K. You would see, absolute mania in altcoins. But the reason why I wanted to do this video today is to make you aware of what's coming, so you're not going to be the ones aping into the top of this altcoin market, because we're about to see probably YouTube views go parabolic. We're about to see market interest go parabolic. We're about to see people lose their shirts trying to FOMO into the market. And that is not something that I want you to do. I want you to be really level-headed. So I'm about to give you my playbook in terms of actually maximizing this rotation. So if Ethereum rallies as a catch-up trade to Bitcoin, which could easily be a simple trigger for altcoins to rally. I think that's already been proven over the past week. Alt's propensity to rally when Bitcoin rallies, then you want to make sure you're positioned in the right altcoins. You want to make sure you have the right strategy to actually capitalize on this altcoin run and not succumb to it by getting the wrong entries and getting in too late. So the first thing that you need to do in terms of building your altcoin portfolio is making sure you are in the plays that are actually going to outperform Ethereum. Because if Ethereum is the Bitcoin catch-up play, what you don't want to be in are the laggard plays. So these are the plays that aren't actually outpacing Ethereum. These are the coins which, okay, they're probably going to go up, but you would have had a much better risk-reward profile simply just longing Ethereum and actually being able to sleep at night. So the litmus test with altcoins historically has been, if they can't outperform Bitcoin, then you may as well hold Bitcoin. I think we're entering the period of the market where it's, if an altcoin can't outperform Ethereum, then why hold the altcoin? Why not just hold Ethereum? So I think at this point in the cycle, it's extremely important that you actually start using the ETH pairs to chart. So instead of just charting versus USD, obviously, it's good to get technical levels on USD. I think you should also be implementing a strategy which actually charts versus Ethereum as well. And looking for confluence, so looking for altcoins that are actually in uptrends versus Ethereum and not in downtrends versus Ethereum, because lots of people are going to be longing alts that are actually in a downtrend on the daily and weekly versus ETH. This makes no sense. Now, the basket of assets that are actually outperforming Ethereum at the moment is quite small. Ethereum is still the leader of the market. So right now there are only really a few sectors which I think you can strongly assert, will outperform Ethereum based on the existing data that we have. I'll go through a few of these sectors now. The first one is Ethereum ecosystem. So ETH betas, theoretically, because a lot of them are lower market cap, but they're linked to Ethereum and Ethereum rallies aggressively, a lot of these will be viewed as catch-up plays to ETH. These are logical plays at the moment. I'm talking, and I'm not saying just ape these coins now, I'm just telling you these are the places to look. You know, coins like ENA, coins like EIGEN, coins like ETHFI, Fluid has been a great one as well. These are the sort of coins that I can definitely see outperforming Ethereum, and on the charts have already gained relative strength versus Ethereum, or actually look solid versus Ethereum. The next pool that I would look at are the ecosystem betas to assets like Solana, assets like SUI. So the strongest Sol ecosystem plays I still think are going to do quite well. I still think Solana has one more big rally this cycle. SUI ecosystem plays I think are going to do well. So looking at the main ecosystem plays of the L1s, I think is a logical place to focus on as well. The other sector that's doing really well right now is the BONK ecosystem. So what I would look at are coins in the BONK ecosystem, either meme coins, new launches. That's a very hot playground. I think that'll be the case for the coming months. The other thing I would look at, this is a broader narrative, but I think it's an important one to grasp, are the reflexive altcoins. Now, what do I mean by reflexive altcoins? I'm talking about altcoins which have the propensity to outperform the market on a relative basis. This can be either technically triggered or fundamentally triggered. So ENA is a good example. One of the reasons it's rallying beyond just being considered an ETH beta is the fact that it's reflexive in nature. It does really well in positive funding environments because its APRs increase, which cause more people to stake ENA, which puts more buy pressure on the token. Other reflexive coins are some of the meme coins, you know, especially these coins that big creators are gravitating towards. Like if you look at SPX from Murat, if you look at Useless from BONK Guy, because these are big names that retail are attracted to because the algorithms are pushing their content, in the peak of the market, these guys will gain a lot of traction, and because they already have, you know, really big communities, they're going to be pushing all over the social media feeds. And as crypto goes up, ETH hits 5, 6K, retail comes back in, they want to gamble on altcoins, they're going to see these guys pop up on their feeds, and I think they're going to be super prominent. Now, I'm not saying ape into the highs. I'll get into how I would technically play the altcoin game in just a minute here, because I think it's very important, as I said, in this late stage period of the cycle to be extremely conservative with actually how you play the market, because from a macro point of view, we're entering that final stage, that blow-off stage, but I still think all of these coins have upside if Ethereum, and that is my thesis, that Ethereum does end up breaking all-time highs and going much higher, obviously triggered by, you know, a Bitcoin rally to the upside. And this may mean Bitcoin could actually have a period where it starts to outperform Ethereum again, and then ETH and alts cool down, and then Bitcoin comes back and leads for a little bit in the market. So don't think everything's up only. We're in July right now, talking a multi-month time frame here, and there's potential for there to be a secondary rally next year as well. So potentially like a local top later this year, a cool down, and then a secondary top in 2026. So we don't know the exact path. What we do know is that we're towards the final, or in the final stage here, but we don't know exactly how it's going to get there. And hopefully my strategy today actually helps you get there. So those are the buckets I'd be looking at. The playgrounds, which are already showing relative strength versus ETH, this is signaling that these are probably going to be the plays that outperform ETH. And I'd also keep an open mind to new narrative plays as the market develops. So for example, AI is something that I think at some point is going to have a strong rally. This doesn't mean you need to pre-position too early. Stay safe for now, stay conservative for now. But if the market starts to heat up, you can definitely take individual trades on these coins as new narratives start to emerge. But just make sure if you're doing that, you treat them as trades. You're not convincing yourself in the final couple months in the market that you're investing in the future of France in terms of this new AI coin you're aping. No, you're trading that coin based on the fact that AI is hot, and you'll have a predetermined stop loss for that trade to make sure that you don't round trip. This is the next point I want to talk about, actually getting entries. So first thing you want to do is identify your watch list. What coins are outperforming ETH? What are likely going to outperform that have a strong narrative and have strong fundamentals? Once you do that, you need to outline your technical triggers for entry. Now, your technical triggers will likely be on dips. I think in bull markets, the best risk reward in terms of my strategy isn't aping into resistance or even trying to time breakouts, because there's lots of deviations and fake outs in this market. It's actually getting in on dips. And we've even seen, you know, last week we had a big dip. People were very, very scared. I did a tweet. I said, I don't know, everyone's scared of buying the dip. You know, human psychology never changes. But in bull markets, dips are opportunities to buy. So what you want to do is mark out your key high time frame levels, also have a moving average. If you watch the channel, you'll know about the money noodle. This is an indicator that I use depending on the time frame where it has the strongest confluence to actually try and get entries on pullbacks. And at this stage in the cycle, because we are relatively late game from an overall cycle point of view, not from a micro point of view, keep in mind, this could be the most explosive period for alt, even though from a macro point of view, it is late game. because we're in this stage of the cycle, this isn't like 2023. We can ape a bunch of coins randomly and then get a rough exit throughout this year, because a lot of the entries that maybe you got in 2023, you potentially would have already started to ladder out of those coins because they are multi-year trades. This is a bit different from those entries where in the FTX saga, you may have tried to knife catch the bottom. That's something that I did on ETH and ETH ecosystem alts. This time around, you want to be entering with technicals in mind, because every single time you enter a trade, you want to have a stop loss, so a technical invalidation for that trade. So in this stage of the market, I don't really want to hold anything that looks weak in my short to mid-term portfolio. Now, obviously, there are some alts which I want to hold long-term. That doesn't mean I won't take profits on them. Something like my ETH holdings and Solana holdings, I'd like to have exposure to these long-term, but also if they start to show signs of blowing off, I'm also okay to take a significant chunk off the table and then redeploy in the bear market. But for anything short to mid-term, I'm looking at having a pretty strict invalidation on those trades. So if I enter at a certain level, I'll have a time-based and a price-based invalidation. This means that there's no chance of round-tripping my stack, especially if you're tight with your entry triggers using technicals. You can actually set it up so you have clear invalidation levels within, let's say, 10 to 15% of your buys. So even if you invested 10 grand into the market, you might be willing to go down to 9 grand, so lose $1,000, but that is predetermined. You're not going to let yourself round trip your entire stack, because this is something that I've learned from the hard way from experience in 2021. I invested a bunch of money into the market and I didn't set invalidation. So although I made a lot of money and my holdings went from, I think at one point, like 50 grand, 100 grand, all the way to about $1 million, I ended up round tripping the majority of those gains because I didn't have any sort of invalidation. So 2 ways to mitigate against that. As the market goes up, you TP out incrementally. So you have predetermined percentages where you take profits. If you think a coin's still going to go higher, have those predetermined levels where you take profits. And secondly, have an invalidation to the downside. So it can be a combination of high time frame levels and moving averages that you'll actually invalidate if price starts to breach that level. So 200-day MA for Bitcoin and a lot of alts makes sense. I use Money Noodle on the time frame where it has a lot of confluence. Right now, that's 4-hour and 8-hour, 12-hour and daily. But 4-hour right now is working the best for me. But in terms of a high time frame breakdown, you might look at the daily, depending on how much price history a chart has, and you'll actually use that to invalidate to the downside. So to summarize my strategy, I'm trying to be in the alts that are going to outperform ETH. I'm using technicals to get the right entry and make sure I have a stop loss. And I'm going to enjoy this last period of the cycle. I'm going to let my winners run. So I'm going to TP incrementally, but I'm going to let them ride, because you never know how high price discovery can go. If I get a bad feeling about an altcoin, if it starts to break down, I'll have a pretty ruthless propensity to cut that position. And overall, I'm going to be conservative with profit taking, because it's good to have these rules now that we're in July, because I think once we enter like October, November, a lot of people are going to forget these basic principles and they're going to wish they watched a video like this, right? Because they're going to ape into the market, they're going to lose a bunch of money, they're going to lose their shirt, and then, you know, what happened to me in 2021 is what's going to happen to them. So if you were around in the last cycle, you've probably learned from experience, you're probably going to do a lot better this time around. The good news is, if my thesis is correct on Bitcoin really having a blow off top and Ethereum thus being a catch-up trade, then altcoins are going to also have an amazing period in the market. Just make sure you actually lock in your gains this time, and make sure you subscribe to the channel for regular updates on the trades I'm taking, the plays I'm making, and I'll let you know as well when I think things are getting a little bit overheated and I'm de-risking. So have a lovely rest of your day. I might do another video later today or tomorrow. Even though I'm in a different location, I'm still grinding hard, and I will see you in the next one. Have a lovely rest of your day. Peace out.